So as our weekly candle is about to close and a new one is about to open up, Bitcoin is fighting to close above this 200-week moving average. We know the Bitcoin futures price did not close above its 200-week moving average, and that's currently sitting for Bitcoin against the US dollar pairing right around that $22,700 level. Snipers, we have a lot to discuss today in the immediate short term for Bitcoin. I'm here with Joshua Earp. And remember to smash the like button for the YouTube algorithm if you support this content. And Josh's channel is in the link in the description below. So for Bitcoin right now, I want to just emphasize how important this flag is for Bitcoin, because we came up to test this major resistance at 24,300 and then a lower high at 23,795, also a major resistance level. And now we're forming this, we could call a bullish flag, potentially a continuation pattern to see further upside. Or if we see a failure of this, what's the most important support level to watch? And one chart that I saw spreading around the internet was this symmetrical, or you can call it an ascending triangle that Bitcoin is in, depending on how you draw it, and that we are currently just seeing a test of the resistance of this ascending triangle. And as long as we hold above it, this symmetrical triangle, and its full fulfillment of this breakout would take us further higher. And it's not just that support level that I think is extremely important. I think if we just were to just consider the Bollinger Band support level here, we could theorize that it's at the same exact level as that ascending triangle support. And so there's two places of confluence here at 22,000 US dollars being the most important support level for Bitcoin right now. And so in the immediate short term, we want to watch 22,000 US dollars. That's a very critical support level. And as long as we do not open up that door, we do not have to look at downside targets. If we were to look at a downside target below 22,000, we would hypothesize that Bitcoin would potentially test 20,000 again, because there's a lot of confluence there with a potential third higher low forming and a retest of this channel resistance that we recently broke out of for Bitcoin. But is that a scenario that's completely off the table when Bitcoin so far from the trough to peak on this breakout is 38% to the upside? And the last time we broke out of a descending channel like this, Bitcoin only made it 38% to the upside before it slowed down to see sideways price action. So I think that we do want to keep that scenario in mind of Bitcoin coming back to 20,000 if we breach below 22,000, because it's certainly a scenario on the table, despite this being a potentially bullish continuation pattern here, this bullish flag that's forming after a reversal here at the $20,000 level. And so 22,000 is extremely important right now in the immediate short term. The Bollinger Band and the ascending triangle both show significance there. And for the weekly candle, if we close below the 200-week moving average, I'm not going to be too worried, because at least we wicked above it. And so we'll have to monitor the new weekly candle and see how that reacts. We know on July 26th or the 27th, we'll see interest rate announcements. And so that could potentially bring some volatility into the market on Tuesday. So there are a lot of other things we'll discuss, like Ethereum as well. You can see the Ethereum to Bitcoin chart is trying to break some new highs here with this push to the upside, breaking through this 70,000 Satoshi barrier. I'm going to discuss what this could mean for Bitcoin, and then we'll talk about long and short positions. But I want Josh to share his screen, because it's not just this major support that is at 22,000 based on the Bollinger Bands and that ascending triangle, but Josh actually has a very important support level there as well. And so I'll switch over to you, Josh, and then we'll talk about some other stuff and wrap up this live stream.
Yeah, 100%. And did you want to cover that 200 week now or later? I think you should be the one to cover that.
Yeah. So
plotted that out.
Yeah, the 200-week moving average. Whether we close above it or below it, I think that so far we can just say that we're rejecting it because we're so close to it. I know that with our monthly candle closing, the bulls did rescue that extremely important support here at 20,000 US dollars. And so for the bulls to win this battle as well, I wouldn't be surprised, but for the bears to win this one, I think that would be a clear sign of indecision right now with this consolidation. And I think that there's a couple signs right now that Bitcoin is starting to slow down with this downtrend. And a couple of those stem from the fact that if we go into this Bitcoin to US dollar pairing, what you'll notice is we're finding resistance here at this extremely important level. And the S&P 500 was able to see continued upside, but Bitcoin was slowing down against the equity market. So to me, that's saying that we are certainly slowing down in the immediate short term to see upside, but we're also slowing down on the bearish end in terms of seeing downside because we're breaking out of this very strong descending channel. So there's two ways that we're slowing down. We're slowing down from seeing strong moves to the downside, and we're also slowing down from seeing further upside in the immediate short term. And that to me hints at sideways price action potentially in the immediate short term. And so if that were to happen, it would be very similar to this channel breakout at 30,000, where we did go sideways for about 2 months before we saw a continuation of the trend. And eventually that was actually a continuation to the downside. And so I think that sideways is the most likely place. And, you know, one thing we always say here on the Snipers channel is based on the volume. You know, when there's low volume, the path of least resistance is always sideways to a little bit higher. And one thing that I'm watching right now is where are we going to be getting some institutional sell pressure, because we got institutional buy pressure already. And since then, we haven't seen institutional sell pressure, or even more institutional buy pressure. It's been very low volume in comparison to the initial spikes of volume that we got when Bitcoin came below 17,600. And so I would beg to ask the question, where is the next strong spur of volume going to come in? Is it going to come with a low volume sideways move? And when Bitcoin, let's say, tests an important support level, we'll see another spur of buyers come in? Or are we going to be seeing potentially a continuation of this uptrend and then the sell pressure coming in a little bit later at higher prices? Because one thing I'm watching for to assume the end of this breakout that Bitcoin is currently experiencing is some sell pressure that equates to the amount of buy pressure on the institutional 6-hour time frame, and we haven't seen that yet. So to me, that's another confirmation that we're potentially going to be seeing a lot of sideways price action over the next few days, next few weeks. But who knows? Let's see. I mean, this is a very large range that Bitcoin is in. It's from 24,300 all the way down to 17,200. So Bitcoin could really flirt inside of this range for quite some time, which I think that would actually be a great thing for the day traders, because I think that there will be a lot of opportunities to, let's say, long and short Bitcoin. And I think we're still early inside of this consolidation. So that's something we'll talk about in just a second. But I see we've got Billy, Calvin, Bison, and Social Crusader on our live stream. Good to have you guys on. If you have any questions, feel free to drop them below. And we'll go into some 4-dimensional revolving parts and Ethereum as soon as Josh gets to show you his extremely important support level on that Snipers spider line that you have drawn out.
Oh, yeah, let's do that. I'll go ahead and share. Thank you, by the way. That was some of the best analysis I've ever seen. See, he's always setting the bar, I mean, I personally didn't even see that ascending triangle, but right now it is kind of obvious, it's like, that's why you guys have to make sure you're always tuned in to the Snipers YouTube channel. They don't call it Snipers for nothing, right? So anyway, as you guys can see, we're on the daily chart. And for those of you that have, tuned in the past couple days, then you would have known that we already called this and we were in a short from, 24,000, this spider line sold down here, got back in right here, came back down. Let me see if I can move this. But the interesting thing is, guys, is like, and if you go back and watch, you'll see, I told you this is a take profit zone. If you guys were holding a short from the 24,000, damn near 24,000, 23,900 level, you should have been taking profit here, because what typically always happens, right? It's like previous resistance always becomes new support, right? So the thing is like, aside from this golden, parallel channel. I kind of tune out like that because that's kind of a shorter term thing. But what I'm talking about is this yellow spider line right here. We tested it as resistance twice, and now we're testing it literally right now as support. And so for me, it's an undecided time right now for Bitcoin. And so you're not going to see me in any trade or anything like that, basically. Because I already exited my short position in profit. And so basically the whole thing with that is I also do still have, there are a few things I want to point out. Okay, obviously there's the 200-week moving average, which is very important. But these white lines in particular were always drawn on this chart in advance. And, if we see a breach below this spider line right here, which we've already seen on the daily a wick below it, but so far it's only been able to wick below it. But if we come down, and it's so crazy how much the price respects these. I mean, these are lines from the beginning of 2018. These are like, almost 5 years old, these spider lines. They're not just some random lines that, are out of nowhere. And as you can see how much the price respects it. I mean, look, it tested it right here as, support and then resistance. Now it's support. It's an obvious line. And next to nobody I know has it drawn out on the chart. So it's very important. It's almost like having these spider lines is kind of like having cheat codes for like Grand Theft Auto. It's kind of like we have the jetpack, right? And so if this spider line right here, yeah, I mean, we could see a bounce, but it also could still be bearish. It's one of those ones where it's like, I'm like 50-50, usually I'm pretty confident in a direction, but right now I really am 50-50. And anytime I'm ever 50-50, I'll never be in a trade. You'll never see me in a trade if I'm 50-50. Usually I have to have at least like a 90% confidence rate in order to even enter a trade. But I will say though, to the bearish side of things is like even though this daily candle did come up, I mean, it touched this line perfectly, this white line. So if we were to continue to see more room to the downside, we're still on track to get there. As long as we continue to follow this white line right here, we are going to get there. But as long as this spider line holds a support, this is really, in my opinion, this is the last, and this is the last thing that's holding us up right here. If this spider line goes, it all goes. So, you could consider taking a short position if there's a breakdown below the spider line with your stop loss right above it. Or if you want to be ballsy, you can open up long right now and put your stop loss under here. It just depends on what you want to do, what your risk tolerance is and whatnot. So that's kind of where it's at. I will say though, for the DXY, let's go take a look at that. But honestly though, like you said, it's not even open, right? Because it opens tomorrow.
Yeah.
But what are the hours for the DXY? I don't even know. I'm not a forex trader.
Futures are open.
I'm just a expert in technical analysis. But yeah, as long as this line holds though, we're still bullish on the DXY. That means Bitcoin's going to come down. So I guess tomorrow we're going to figure out more about that. So I'll send it back over to you.
Thank you so much, Josh. So, that spider line is at 22,000 US dollars, at least right now. So there's a lot of confluence right now showing that 22,000 is one of the most important levels. So I think for the earliest confirmation at this point, what we want to monitor here is 22,000 US dollars. If we break below that, then it puts the scenario on the table for Bitcoin to form a third higher low and potentially come down to 20,000 US dollars. And as long as we stay above 22,000 US dollars, all we need at this point is a break above 24,300. And it's not because it's the current consolidation high. That has been a major resistance level that we've been monitoring ever since Bitcoin first came down below 18,000. We were looking at this $24,300 level as a potential first target. And so that's why it's so significant. If we break above 24,300, let's say, we get good news on the interest rate announcement and maybe they do a 50-point basis interest rate hike instead of, 75. Maybe we see a breakout in equities and in Bitcoin, and then we can potentially talk about 28,000 US dollars as that next target if we break above 24,300. So this is the most important range right now in the immediate short term, 24,300 and 22,000 US dollars. What's interesting is Ethereum to the Bitcoin pairing is breaking out. And so I guess a lot of people will ask, why is this happening? Is it because of the merge that's coming up on September 18th or around that time? Well, I would say that that could certainly be the case. The fact that we're breaking above 70,000 Satoshis, it puts this high on the table as an area of interest for me, like right around 76,000 Satoshis. I would say that what I'm expecting is some sideways price action on the Ethereum to Bitcoin pairing. If Bitcoin does not continue further above 24,300, then I think that that's highly likely to see sideways price action. But there could be times that Ethereum does outperform Bitcoin. When we're looking at the Ethereum range, you can see it's also in a pretty big range here with a resistance of 1760 on the US dollar pairing and a support of 1277. And then we also have the 2018 previous all-time high at 1440. And so Ethereum could really just move sideways for quite a bit inside of this range for some time before we really get any decisive answers. Because even if we do get above 1760, then we'll face 1980. And so that's going to be a very strong area of resistance for Ethereum in the immediate short term. So we'll continue to monitor Ethereum. And yeah, so for Bitcoin, I would say that if we're going to assume that it could move sideways into this week, we'll pay attention to what happens on July 26th or 27th when Jerome Powell announces the interest rate hikes. We'll see what the markets are doing. But any price action above 24,000, I think, is still a reasonable place to take a short position with a very tight stop loss at 24,300. Because if we break above 24,300, we can expect some volume to come in there. And then for long positions, I'm looking at this previous weekly open, or at least it's going to turn into one here in less than an hour at 21,000 US dollars, all the way down to that 1760 or $17,204 area. So I would entertain dollar cost averaging into a long position, at least because I would expect this consolidation to continue if we still don't have any high sell pressure or high volume. And somebody mentioned on the chat that Binance has the most volume since the COVID crash, but Binance had wash trading occur this week, and so that's why you'll see a lot of volume on that pairing. So you'll want to look at Coinbase or a different exchange for Bitcoin right now, because Binance is USDT pairing. It does have the most volume in general, but it's also now very hard to see what's real, what's not, because of that wash trading that occurred earlier this week. So I think that's it for today, Josh. Do you have anything else you want to talk about?
No, I think that's it. We just want to keep it simple, let people know when it's safe, when it's not safe. And because, like we always say here, an ounce of prevention is worth a pound of cure.
Well, thank you so much for your time, Josh, and your amazing analysis. So 22,000, the immediate short-term most important support level, 24,300, the immediate short-term most important resistance level. And if we break above 24,300, we'll have another video out. If we break below 22,000, I'll get another video out, because those would be some significant breaks, and we would want to discuss what's coming after that, because that would open up the door to a different range of price. So thank you all for tuning into this Sunday update. And once again, Josh's YouTube channel link is in the description below. Smash the like button before you guys head out, and we'll see you guys on our next video. Snipers out.